Europe has built the most comprehensive financial surveillance system in history, and as of January 1st, 2026, it has become ever stricter. It's called DAC 8, and it's a centralized database where all tax-related information of European residents is automatically collected. Foreign bank accounts, crypto assets, international companies, tax rulings. Everything is linked to your tax identification number and accessible by tax authorities across Europe. Most entrepreneurs are reacting to this news in completely the wrong way. So, in this video, I'll explain exactly what DAC8 is, what actually changes compared to the past, the key deadlines over the next few years, and most importantly, how to adapt your banking structure without making drastic decisions that could cost you far more than you expect. Let's start with the basics. DAC stands for Directive on Administrative Cooperation in Tax Matters. DAC8 is simply the 8th version of this series of European directives, but this time is different. Why? Because DAC8 creates a centralized system of automatic information exchange between all tax authorities in the European Union. So, what exactly goes into this system? Every bank account you hold outside your country of tax residence. All your crypto activities, purchases, sales, swaps, wallets, exchanges, cross-border tax ruling above 1.5 million euros. And starting in 2030, even employment, income and pensions. This is made possible through the NIF, the European Tax Identification Number. For Italians, think of it as a European version of the tax code, no longer national but EU-wide. It will become the single identifier linking every transaction, every account, every company you own in Europe. Essentially, a complete digital map of your wealth accessible to all European tax authorities. Now, many entrepreneurs discovered this and went into full panic mode. But before you do anything, you need to understand one key thing. Automatic financial information exchange has already existed for almost 10 years. It's called CRS, Common Reporting Standard, and it's been active since 2017. If you're an Italian tax resident with a bank account in Switzerland or in any of the 120 CRS participating countries, the Swiss bank already automatically reports your account balance, interest and key transactions to the Italian tax authorities. This has been appearing for years. So, what actually changes with DAC8? Three fundamental things. First, centralization. Before, each country had its own database and exchanged information bilaterally. Now, there is a centralized system where European tax authorities can automatically cross-check data. Second, crypto assets. CRS mainly covered bank accounts and traditional investments. DAC8 explicitly includes crypto activities. If you buy Bitcoin on Binance as a European resident, the exchange reports everything to your national tax authority, which then shares that information across Europe. Third, the NIF and IF becomes mandatory, starting in 2026 for tax rulings and crypto, from 2028 for transfer pricing, and from 2030 also for employment income and pensions. DAC8 is not a switch that turns on all at once. It's a gradual process. From January 1st, 2026, so right now, the automatic exchange includes the NIF for cross-border transaction, tax ruling above 1.5 million euros, all crypto activities. So, what does this mean in practice for cryptos? All exchanges operating in Europe must identify the tax residence of their clients, store their NIF and IF, and report all tax-relevant transactions annually to the tax authorities. Capital gains, swaps, transfers, everything. From 2028, the obligation extends to cross-border advanced tax rulings, transfer pricing agreements, and reporting for multinational groups. This mainly affects businesses with complex corporate structures. For example, all intragroup transactions become automatically traceable and verifiable. And from 2030, the NIF may also cover employment, income, and pensions. At the point, it truly becomes a single identifier for everything. Let me give you 3 concrete examples to show the real-world impact of Directive, which in many ways represent the lowest point in the history of financial privacy. Example number 1. An Italian entrepreneur with a Swiss bank account. Before the DAC8, Switzerland reported the account to Italy via CRS. If the entrepreneur declared it in the RW form, everything was fine. If not, the tax authority might not immediately cross-check the data. With the DAC8, if that entrepreneur also has accounts in Germany or France, Italy receives data from Switzerland via CRS and from Germany and France via the DAC8. The system automatically cross-checks everything linked to the tax code. If it sees that you declared the Swiss account but not the EU accounts, it triggers an automatic alert. Example number 2. A crypto trader resident in Italy. Before the DAC8, they could operate on Binance with no direct reporting obligations. They were supposed to declare gains themselves, but many didn't. With the DAC8, EU-registered exchanges automatically report all transactions to the Italian tax authorities every year. If you don't declare them, the system generates an automatic alert. No one needs to discover your trades anymore. They're already in the database. Now, example number 3. An entrepreneur with a Luxembourg holding company. Before the DAC8, verifying transfer pricing required manual audits. From 2028, Luxembourg automatically transmits such ruling and transfer pricing data to Italy using the shared NIF. The system cross-checks everything automatically. This Italian company pays 500,000 euros in royalties to a Luxembourg holding. Similar companies pays 200,000 euros on average. Discrepancies detected. Automatic alert. Now, after the DAC8 came into force, many entrepreneurs are reacting like this. I need to change my type of residence immediately. I'll close all foreign bank accounts. I'll move my family to Dubai. I'll liquidate my crypto and keep everything in cash. These are worst possible reactions because they're based on a false assumption. The DAC8 does not create new tax obligation. It simply makes it much harder to ignore the obligation that already existed. If your foreign accounts are correctly declared, nothing changes. If you pay taxes on crypto gains, nothing changes. If your corporate structure is properly set up, nothing changes. What changes is that forgetting to declare is no longer possible because the system detects it automatically. So the real question isn't, how do I hide from the DAC8? The real question is, how do I structure my wealth correctly in a world of total transparency? And this is where the smart solution comes in, strategic and legal banking diversification. I'll go into more detail now, but if you already want to understand which international banking solution fits for your profile, you can contact us through the link in the description. Our internal banking expert analyzes your specific situation and show you the best jurisdictions, credit cards and banking institutions for your profile. Diversification means building an international banking structure where every account is properly declared. Every cash flow is defensible, but your wealth is strategically distributed across jurisdictions with different standards. It doesn't mean hiding money and hoping no one notices. That's stupid and illegal. For example, the United States does not apply CRS. They use their own system, the FATCA, which works in reverse. Foreign banks report accounts of US citizens to the US, but the US does not systematically report foreign-owned accounts to the other countries. An Italian resident with a US LLC and a US business account declares these assets in Italy, but the information does not automatically flow into the EU's DAC8 centralized registry. Singapore and the UAE participate in CRS, but are not part of the DAC8 because they are not in Europe. You could try to diversify on your own and open accounts in the US, Singapore, UAE or Switzerland. But as a non-resident with international structures, this is extremely complex and often requires physical presence at the bank. Most entrepreneurs who try on their own get rejected. That's why more and more entrepreneurs and high net worth individuals contact GloboBanks. We work with over 60 international banking institutions and have formal introduction agreements with them. This means opening accounts that would otherwise reject you, eliminating the need for physical presence, drastically reducing minimum deposits, and obtaining preferential conditions like zero maintenance fees. but most importantly, it means structuring your banking diversification correctly. So every account is properly declared, the structure is defensible in case of audits, and your wealth is distributed strategically but always in full compliance with the law. Transparency is now inevitable, but how you manage that transparency makes the difference between sleeping peaceful and living with constant anxiety. GloboBanks offers free strategic consultations for entrepreneurs who want to adapt their banking structure to the new DAC landscape. During the consultation, an international banking expert analyzes your current situation, your goals, which jurisdictions make sense for you, which banks accept your profile, and how to structure declarations and documentation correctly. The link is in the description. Book your free consultation and let's build an international banking structure suited for the new era of transparency. See you in the next video.